Hi everyone, welcome back to this week's Technical Insights. Major indices around the world started the first week of second quarter on a negative note. Most indices ended in the red, with some managing to stage a rebound on Friday. The key macroeconomic data that came out last week was the US non-farm payroll numbers and the unemployment rate. The US economy added 303,000 jobs in March last month, the most in 10 months, compared to a downward revised 270,000 in February. This caused US Treasury yields and US stocks to rebound on Friday. Before we dive deeper, let's do a quick recap of how the market has ended last Friday. Our Singapore Straits Times Index closed lower on Friday, falling 16 points or 0.52%. In Asia, market largely ended in the red. Japan Nikkei 225 fell 1.96% on Friday, extending its losing streak to 2 weeks. Shanghai Composite Index slipped lower by 0.18%, while Hong Kong Hang Seng Index inched lower by 0.01% on Friday, after a shortened trading week on Easter Monday and the Qingming Festival. On the US side, the Dow Jones Index rebounded about 307 points or 0.8% on Friday after a sell-off on Thursday, where the Dow tumbled 530 points or 1.35%, making it its biggest daily drop since March 2023. The S&P 500 climbed 57 points or 1.11%, and the Nasdaq Composite Index advanced 199 points or 1.24%. Large tech companies had a good Friday, with Facebook parent Meta and Netflix both winning more than 3%, with Amazon, Microsoft, and Google parent Alphabet also advancing. Despite the rebound on Friday, all three major US indices posted a losing week. The Dow Jones Index lost 2.27% and settled at 38,904 points, posting its worst weekly performance this year. The S&P 500 declined 0.95% for the week to close at 5,204 points. Tech-heavy Nasdaq Composite Index dropped 0.8% to finish at 16,248 points. After the jobs report on Friday, markets are now torn between wanting a strong economy to further support corporate earnings growth or wanting a weaker job market that will give the US Fed the green light to start cutting interest rate. My opinion is expectation of a Fed rate cut have been fluctuating, and investors should focus more on the corporate earnings performance going into the earnings season. In Asia, Hong Kong markets have only a 3-day trading week due to the Easter Monday and the Qingming holiday. In that period, the Hang Seng Index advanced 1.1% to 16,723 points, its second consecutive winning week. The Hang Seng Tech Index, however, declined 0.77% to 3,450 points. For the week, our STI Index tracked the decline in the US indices and fell 0.18% to settle at 3,218 points, ending the 4-week winning run we saw in March. Top performer on the STI Index we saw last Friday were Jardine Matheson and Hong Kong Land. We covered both of these counters on the 18 March video. So let's get back to the charts to give you guys an update of the analysis. First, let's have a look at Jardine Matheson holdings. In the analysis on 18th of March, we identified a double bottom support on the lows of 30th October and the low of 30th November last year, around the price of $36.72. Last Thursday, Jardine Matheson price reached a new low of $36.36, below the double bottom support that we saw last year, but closed above this level at $37.13. The MACD indicator we saw previously was showing signs that the pullback in the share price was losing momentum as the MACD line converged towards the signal line. We mentioned the MACD line could break above the signal line in the next couple of weeks, and once a crossover of the MACD line above the signal line happens, it could signal a change in the price direction upwards. And fast forward to this week, we have a very high chance of seeing that happening this week, where the MACD line crossed above the signal line and we could see a rebound in Jardine Matheson's share price. The previous RSI reading on 18th of March was 45 points, 5 points below the 50-point neutral mark. So momentum then was still slightly weak, but once the RSI breached above the 50-point mark, uptrend momentum may accelerate again. The latest reading we have last Friday on Jardine Matheson RSI reading is still around the 40-point range. So no change on the momentum reading for now, indicating that Jardine Matheson share price may be hovering around the $37 range for now. The immediate resistance will still be the 20 days moving average on the Bollinger Band basis, which is the white color line that you see here, around the $37.50 level. A break above this Jardine Matheson holding share price may retest the 50 days moving average or the 100 days moving average, currently around the $38.50 level. Next, let's take a look at Hong Kong Land. In the analysis on 18th of March, we identified the low on 25th October last year at $3.07 as a pretty strong support level. It was tested twice this year on the 22nd of January as well as the 5th of March and held up pretty well, so indicating that $3.07 would be a strong support level to look at. We also noted that the high of the share price was unable to clock a higher high, suggesting that the long-term downtrend that we observed is still in play. Hence, the high on 29 February at $3.38 would still be the first resistance level to watch out for, and this level has now found confluence with the upper bound of the Bollinger Band, making it a more difficult level to break through. Last Thursday, Hong Kong Land share price reached a new low of $2.90 and rebounded to $3.07 on Friday, the support level that we have been emphasizing earlier. Indicator-wise, the MACD indicator is still having a negative reading. Hence, we do not foresee a quick rebound in Hong Kong Land share price. The RSI reading has come down from around the 50-point level on 18th of March to the current level around the 40 points level, which we saw last Friday. So momentum-wise, it is still considered a pretty weak reading. So for now, I believe we still need to be a bit more patient and reiterate the support at $3.07 as the preferred entry level for Hong Kong Land. And the first resistance to look out for could be the 50 days moving average at $3.18. And these are the updates that I have for you this week. Thank you for tuning in as always. Do remember to like, share, and subscribe to stay updated with the latest market developments. And I'll see you again next week in the next Technical Insights.